we will just move right in to the portion of our presentation that you've all been waiting for. We'll do kind of a QA style with Tony Drost of Boise Investment Properties Team, which is officially official. It's a team within Swope Investment Properties. So Tony and I are working with folks together, and Leslie is helping us help our clients, and we're so grateful for that. And for those of you who haven't met Tony already, he's been doing real estate for a couple decades now, and he started in property management right around 1990, and then went on to start first-rate property management officially in 1994. And so he has kind of seen it all when it comes to properties, and he's also kind of got those eagle eyes anyway when it comes to conditions. So if you ever have a chance to walk a property or have him walk a property that you're considering for purchase, you will not be disappointed as you see the things that he notices. And he's had clients, new build clients that we've worked on together, and it was a brand new property, and they're like, yeah, I don't want to pay for an inspector. Tony, just go put your eyes on it. I don't know that he loves it when they make that decision, but honestly, walking a property feels like you're walking it with a home inspector when you walk it with Tony. Now, all that said, all the things that he's seen and done in the real estate market, let's first of all say this 10 times. So this will be the 10-time mention countdown. Tony is neither who can finish my sentence, attorney or an accountant. So he'll talk to you about some partnership stuff, but obviously those guys are key members of the team. But most importantly, what does Tony do for fun when he's not dealing with the screaming fast real estate market? He drives that car and race cars 100 miles. What's it called, Tony? The race?
I do open road racing and drag racing. The fastest I've gone is 205. Not in that
and
car.
They tend to breathe.
That car had some problems. That was a backup because my other cars are in the shop. That's what happens with race cars. And I already paid, so I dropped speed classes and we drove this. And even though my daughter and I won our class, I almost blew that thing up. It was not happy.
And this is actually a truck. You can.
Yeah, it's a roadster truck. Big bomb on the market. They cost a lot and are the most useless truck ever made. It only seats 2 people. And the back is, fully finished carpet and hardwood, and it's useless.
Beautiful though. It's absolutely beautiful.
Thanks.
So, okay, well, I'm going to stop sharing my screen. And we're going to do this more just interactive style, throw some questions at Tony and learn from some pro tips on partnering with Tony Drost of Boise Investment Properties and Swope Investment Properties, founder of First Rate Property Management. And so if we didn't already qualify that Tony's not an accountant or an attorney, let's do that now and get right into it. Tony, what was your inspiration for forming partnerships?
Well, obviously I've been working with Mike Swope since the 90s. Mike was the first person I saw doing partnerships. And I don't know how, I probably asked him to be part of it. I'm not sure, or maybe he invited me to be a partner with him, but we bought, and I think it was 2004, we bought 2 fourplexes. And when Mike first got started, he did a lot of no money down or very little money down. And my recollection is we put 10 grand down. We did a HELOC for another 10%. So we were able to get into these for very little money. And then I did my thing and cleaned them up, got the rents going, and we didn't hold on to them long because that was 2004. Might have been 2003, but I think it was 2004. 2005 hit and prices went crazy, and we said, why not? And we sold them and made good money, and went on to the next project. And after that experience, I started getting involved. With 2005 coming in and the way things were going, one of the things I would tie properties up, and if the client hesitated and said, "Gosh, I don't know if I can pull the trigger," I'd say, "Well, I'll buy it, and don't worry about it." And that would make them feel a little more confident. Some would say, "Well, sure, let's do it together," and others, because I was that confident that I would throw my own money in it, I said, "Yeah, I'm a little greedy. I don't want to share it with you. I'm going to just take it." So that's when I started growing my partnerships, was in 2005. It's been good experience.
Well, and Tony's probably got dozens of partnerships right now, and then however many you've done since you started doing these 2 decades ago. So, you're a huge resource for folks who've thought about doing that. And so we'll run through in today's meeting. We'll make sure, let's cover the who, what, where, and how to do it. And let's start with the who, and we'll run in through the pros and cons. But who are the majority of your partners, and who are the people that you're involving in those deals?
Well, a lot of the partners were clients, right? And that's how I kind of grew it. I've only got I have 2 high school buddies, and the only reason I got them in is because they sold their businesses and they have a lot of money. So and they value their free time more than I do, evidently, and so they're happy to throw me their money and let me do all the work. But most of them were clients, and maybe some family went on. There's a couple partnerships where the property needed some work, and so I strategically went out to get partners. So I went to different tradesmen that I work with. I'm like, the thought process is they were going to be a little nicer on their fees, So you got a handyman that can do all the fix-ups, and we'd get a better rate, and so we'd all benefit from it. He's got the work, and he's putting in some sweat equity to improve the property. Same thing with the landscaper. I did a landscaper. I like getting the property manager involved. I talked Jim and Melissa and getting involved. I've done 2 with them, and I think, and Mike liked me as a property manager being involved with his. The better the property performs, the better it is for everyone. And so I tried to follow that suit and bring in those trades to help maximize the performance.
So you're bringing in folks who maybe they want to own bigger properties, but they don't necessarily have the time to deal with being an asset manager and the property manager on that. Or your partners previously might be folks who might have had a little more hesitation on jumping on a deal. And when you've got a partner, of course, you're going to lower your risk and have more kind of eyes on the property, your brains on it, looking at it, and you're lowering your risk by lowering your amount of cash that you need to put in. And then folks who've partnered with you previously, Tony, you've already got your power team, the people that partnership is going to need, that are going to know how to do this. You already know how they work, and you've got them in place.
Yeah, but I think more importantly, they know how I work, and so honestly, it's a pretty simple process. I identify the property, I have a term sheet and a pro forma, and throw out a little bit of my personal thoughts and the overall goal, and almost all of them just jump in, and there's not a lot of questions. You go do your thing, Tony. I think if I failed, I'll hear from it, but so far, it looks like we have some chat on the bottom here. Oh, it's all about the car. That's awesome. Those are important. Got it. Sorry to bring that up. Okay. You guys are funny.
Okay, so so who should people partner with? Oh, and by the way, that was it. We were supposed to talk about we're not trying to solicit partnerships right now. On the member form, the new member form, which we passed out at AVID when you joined, which we haven't been doing lately, but it says, hey, who's interested in partnerships, who's interested in knowing properties as they come on. And so we've paid attention to that. But partnership opportunities don't come around all of the time. But when they do, what are your tips on who to let into a partnership, or who you're including in that process, Tony?
As far as the members or my team?
Well, either way.
Well, I mean,
both.
Format. So I rely heavily on the attorneys and the accountants. And as many as I've done, I have to tell you that, they probably think I'm an idiot every time I talk to them, because I explain what I want and then they tell me how I got to do it. And I don't always follow. So there's a lot of questions, and we get there, right? And I guess that's why we're paying them, is to make sure I do it right. And so the attorneys and the accountants, making sure we're setting it up correctly. On the partners, you just got to find people that you trust. But more important to me is they trust me. So we just, I like, it's easier for me where I don't have to feel like I'm going to be second guessed as to the decisions I make, because when there's a flood, I'm the guy that's walking the property and making the decisions. And
that's as an asset manager, which is the role you take on?
Yeah. Yes, I'm sorry. Yeah. As the asset manager, and I've spent hundreds of thousands of dollars that were pre-budgeted prior to the acquisition. But I'm moving forward, and they just have to trust that.
So trust is a big theme here. We're talking about only partnering with people you trust, and then having the right contacts in place. So you've already got your attorney, you've already got your accountant set up, you've worked with these folks before, and so they're going to be an integral part of your team. And then, of course, you still need an operating agreement, right? And that's something your attorney will.
Yeah, so the operating agreement we use kind of is my manual, because I'm not going to remember everything. And so when I have, unfortunately, I've had people pass away, and I follow the operating agreement and how we're going to handle that. The same thing with, we've had divorces, and we've also had people that said, it's not what I wanted, and I'd like to sell my interest. And so we just follow the operating agreement and the process and handle it. And in all those cases, I got to get the attorney involved as well.
Mm-hmm. And Mike's done partnerships, as Tony mentioned. So some of us a few of us on this call that I'm seeing here I've joined a Mike partnership. Shane has as well. Tony has, among a couple, or at least one other person. And so I just lost my thought in that, but so never mind that interruption, Tony. Sorry. Totally
no, that's all good. You're keeping me on track. Do you want me to get into the lenders and how that can kind of get complicated?
Yeah.
So when you're buying apartment buildings, and Brent knows all this so well, because he's done far more in a much larger scale than me, far more complicated than I care to get into or even try on my own. But on the apartments, it's a pretty easy process. You form they want you to form the LLC, and you're pulling your money together, and everybody can see it, and nobody's shaking their head going, you can't do that. When you're buying a fourplex with partners, lenders aren't going to want to see an LLC. They want a person. And if you're doing a two-partner deal on a fourplex, you could probably go in as co-borrowers and probably not cause any problems. But if you're going to go in with more than two, then that's where it gets complicated, and that's where having that lender Did we all freeze?
Yeah, but I can still hear you.
Okay, so everybody just froze on my screen, but I didn't.
You might have. No.
Video froze,
sorry.
but the auto's still good.
Oh, cool. Thanks. All right, so back to like, so if I'm buying a fourplex and I have, there's 4 of us, then I need to have a lender that knows this process, and I need to talk to them. They like to look at sourcing of funds, and they're not going to want to see me get $50,000 from 3 other people that went into my bank account 2 weeks ago. They're gonna that's not seasoned money, and they're not going to like it. So you got to do a little pre-planning and get those funds into your checking account, which obviously we've talked about trust. I mean, these people are going to give me 50 grand each, and I'm going to put it in my personal account so I can go get the loan, and then we go forward, right? So when it comes to the lending on the 4 units or less, you got to get your ducks lined up ahead of time before the purchase, because they're going to go. When I'm what I call the loan mule, and sometimes it's not always the asset manager, it's the loan mule, but I try to take the burden away from my partners, and so I do it. But as a loan mule, they're going to be asking me for everything. You know, we've all gone through these loans, and we know what they ask for, and they're going to ask for the last 2 months of my checking stuff, and they're not going to want to see funny money being put in there. So I need to have it in there prior to that. So just if you go to do these things, you know, Stacy and I are here as a resource, and we can try to walk you through it and get you set up ahead of time.
So yeah, we'll need in the team. Oh yeah.
Yeah, I have a question on that, Tony. So when you're doing like a 4-unit deal, and you have a partnership, are those loans typically recourse, and then all the partners are on the guarantee, or is it just you, or how does that usually work?
Sure. So that's a great question, Brent. On the commercial ones, it's usually non-recourse, but on the 4 units and less, they're absolutely. And as the loan mule, I am the one that they're going to go after. Yes. So I'm glad you brought that up, because you know, as these other people are considering partnerships, and somebody is thinking, well, I'll be the loan mule and I'll be the asset manager, you're taking on quite a bit.
Yeah, that's a real advantage to your partners, really. I mean, you're doing a lot of the work, and you're on the guarantee, so that's interesting.
I'm just that confident in the properties that we buy, and you know, and maybe that's why I don't have more partnerships than the ones I have. But we usually try to be in a really good situation on those. You know, I remember when we bought, it was just 2 partners. So me and another guy in 2008, when after the crash and the prices were going down, and we bought this fourplex, and I remember my exact words were, "How much lower can prices go?" And then about a year and a half later, or 2 years later, I said, "Well, evidently another 100,000." So, so we were underwater on that one, but we weren't highly leveraged, so we cash flowed through all of that. Never had a cash call, if you will. And we weathered the storm, and we sold that last year, and it was 3 times what we paid for it. So it worked out. It looks like,
awesome.
Stacy, we got all kinds of chat questions.
Mm-hmm.
Yeah,
we
real
have
estate attorney.
questions about lenders.
Yeah. Oh, I see the one about attorneys. And don't you have, does the attorney that you, and isn't he a member of this, did he do LLCs?
Yeah, and I've had a couple attorneys speak here. So we've had Steve Roush, and he is with Capital City Law. And he also is on the radio, I think it's called The Money Show. So you may have heard him on there. I think it's on KBOI. And then also Eric Bolander, who teaches a lot of the real estate law courses. He has spoken to AVID investors and provides services for some of the members. And he also specializes in real estate and business. And then Gurley, Tony, Kim
Gorley. That Kim is short for Kimball. It's a man. And he's done all of my partnership stuff. So, you know, the operating agreement is pretty much boilerplate. I mean, almost everything's boilerplate. It seems like this year that they're more complicated than they ever have, just because for the first time, in the past, I've never allowed exchange monies from partners. I've always wanted to keep it simple. We're bringing in cash, and in this case, we've got people that are doing their own exchanges into my partnership, and that gets complicated. And it's been fun, but we're getting through it. Yeah, so Kim's is a good source. Oh, thanks for typing that in. Were there other ones in there? We're good.
I put all three of those names in there.
Good for you.
And then
Thank
Kim,
you.
I mean, have you worked with any of the other folks in his office, Tony?
I have, but not for LLC stuff. I mean, so they have lots of people in their office. They have guys that specialize in employment for when I get mad and yell at and scream at people, and they're a little mad at me.
Now that you're out of property management, that should be a thing of the past.
I don't have to scream and yell at employees anymore.
No. Yeah. All right. Well, so we covered some lender recommendations and attorneys. So where were we here? So okay.
Question.
Yeah.
Hi, I'm wondering, Tony, what are you up to nowadays? Are you still acquiring, or how much longer are you going to be acquiring if you still are?
Yeah, still acquiring. I don't know what the answer is on that. You know, I follow all the data, right? So what amazes me is right now, way cap rates are on multifamily and what I can get in rents for single family, I seem to be jumping in the single family market again. And I thought I would never speak those words, but I am. I follow where I see the most return, and I'm hoping that changes again, because now I have too many LLCs and too many to manage, and I'd love to just sell them all and get back into one or two. It's a lot easier, you know. I didn't get to it this week, but so next week I'm pretty much earmarking the entire week off and hoping nobody calls me so I can get through my statements and complete my partner reports. It's a lot of work, and so I'll follow the market. I hope that the multifamily picks back up and I get back in there and consolidate and make it a little easier on me. Did that answer your question?
Yeah, I think so. I'm just wondering, do you have a long-term plan for when you switch from acquiring and go to selling?
Oh gosh, when it comes to selling, that's a good point. As the asset manager of my partnerships, I don't vote, and so and that's a con to these partnerships. Is if a couple people decide they want to sell, and the majority votes to sell, then you're selling, and so that's where I've been this last year with it might have been 4 apartment complexes, but it's all good. We did well on our investments, and I'm exchanging into other properties and moving forward. but I don't have a long-term plan as for when I'm going to stop acquiring. I think as I get older and I look at prices, whether it's labor or the price of a truck, I got a feeling I'm going to be my grandpa or my dad here not too far away and kind of go, that costs too much. And, I'll probably just sell everything.
Can I throw out a little factoid that might be interesting, Stacy? When I was last in Boise, I tried to drive all the comps, mostly on apartment buildings. And just agree with, there were 2 apartment buildings that I drove in sales that were over 400,000 a unit for an apartment building, A deals. And, to me, that's price to production. So I agree with Tony. I mean, you got to kind of bob and weave through that, but they're obviously very aggressively priced. A lot of apartment deals are selling at 3, and you can do a 4 or 5 on a single family. So it's interesting to watch.
I have a question for you, Brent. What does it mean to drive a deal? I don't understand that terminology, the use of drive.
Oh, I just really simplistically just got in my car and drove every comp I could look at. I love getting down on the ground. I don't live in Boise, I live in Phoenix. And so, when you're kind of away from the market, I try, and it's not as easy in Boise because it's a non-disclosure state. So are hard to buy. And so I pick everybody's brain. I'll call Tony once in a while, and he's a good source, and our management company. And I try to track what's been selling. And sometimes you got to kind of just say, hey, give me an idea. Is that $250 a door or $300 or $150 or whatever? And then just go drive it. And it's amazing what happens when you get out in the field and you drive properties. I mean, you get ideas, it just kind of frames everything. So really pretty simplistically, just getting in a car and driving all the comps, and I'll look at.
He says simplistic, but he has good sources. He knows our market very well, especially on the large multifamily. I don't know where he gets his data, but it's good. Are we still there, Stace?
Sure. So
Okay.
we went into a little bit on your management when talking about the various players, and you got into a little bit of asset management and how you've served that role, how sometimes that also includes being the loan mule, and if you charge for that service, or if in general in the marketplace people charge for that service when you're working your partnerships, is that a place is that a job someone else could just be the asset manager of a deal?
It's a job, yes. And look at the time of the year. I mean, we're preparing 15 the docs, the 1098s, the end of year statements and everything for 15 LLCs, so the tax preparer can do the K1s to all the different members. It's a lot of work. So I think what the market is they charge about 1% of gross rents. If you're doing multifamily, I recommend that your accountant or the property manager puts those partnership costs kind of below the NOI line. They're kind of partnership costs, and NOI is important for valuation. So make sure you keep those separated.
So that way your expenses that you're spending on, partnership costs aren't going to devalue the property by making it look like an expense that's associated with operations like the utilities.
Yes, ma'am. Correct. Thank you.
And then also to keep it legal, we've talked in the past about partnerships and limits on the number of people and how you handle them. You don't advertise for partners, or there's certain things you don't do, or you could step on some dangerous territory.
Yeah, I mean, first, I think you invited me to talk about this so that maybe the AVID members that are interested can maybe they have a group of friends that put a partnership together, and we presented some information that and can help them, right? And we talked about the attorney and the accountant, and they're going to tell you, if you gather up 15 of your friends, they're going to probably tell you not to do that, because the Federal Trade Commission would kind of look at that as selling stocks, right? And it's a big no-no. And I only know this because some of the attorneys have dealt with that and have cautioned me to make sure that I keep my number of partners under 10. So my magic max would be 9. The only time you see that is on these deals. And then I had that many because when I did the tradesman, where I was like, okay, this it's got so much deferred maintenance, and I brought in all the different trades, and I let them come in at a low amount, so I just had higher partners.
Pro tip.
We talked about, I really like that. I mean, I think it went well, and they loved me, I mean, when it was all done, I made them they were all we were talking about the exchanges, and that gets complicated too, when you go to sell these properties. If everybody in the partnership doesn't agree that we're going to do an exchange together, some say they want to cash out. Well, that's easy. Okay. I don't, the attorneys, that's all easy paperwork. And they want to go do their own exchanges. That's where you got to get the CPAs and the attorneys involved. And because then you're going to be deeding out members from the LLC into their individual names, or whatever name they provide, and so they can go do their own exchange. And so that is something that you absolutely want title. And by the way, that will just blow most title agents' minds. So I definitely would use Scott Darling, who is very, very used to it. He's second nature, right? He's seen so much of it. So yeah, title, the attorneys, and make sure right. And I always recommend my partners, they talk to their attorneys and their accountants just in case. And sometimes there's a little bit of redlining that goes back, and the LLC's attorney will say, okay, I can see that, and we make a few tweaks.
So we have a question on what percentage lenders are going to lend on with the fourplex these days and at these current prices.
Yeah, we're still saying 25%. I think 25% down. So in my case, with the number of, well, it's been a while, so maybe not now, but there for a while when I had so many fourplex loans because I'm a loan mule, right? There was a time where I needed to put at least 30% down because I had so many loans. My rates were going up.
It was like more than 4 loans or something like that. They wanted a higher percent down, wasn't it?
Today, it's a moving target. Right after the crash, it was definitely 4. At one time, it was higher than that. But so it depends on how many of those type of loans you have. Recourse loans, like what Brent was saying, there may be a risk factor. So, and that didn't bother me any because I'm looking at the cash flow and the low cash flow and the safe where we were anyway. So it's all good. And when we're talking about raising these funds, I build a spreadsheet. I mean, we have the cost, the acquisition cost, which may include the attorney and your insurance, which we haven't even got into because there's some special things with the insurance as well. But and then I always have a professional inspection done, and I build a gigantic spreadsheet based on that inspection, and it's a budget item, right? And so I identify the things that absolutely have to be taken care of right now, the things I want to do, and the things where I want to be. And so, depending on the project, we may raise up enough funds for a couple $100,000 in reserves for a bigger project.
And that's what we just did on 13th Street. Tony and I are in one partnership together, and gosh, I don't know how much. I think we raised 200,000, or 200,000 additional was acquired just to make sure there was no cash call. Because that was one of the things you talked about when we were planning for this meeting, is how nobody likes those.
So where are the reserves placed? Where are they kept in an escrow, or where are they?
They're left in the LLC's operating account. So, which I have control of. So again, trust.
Tony, quick
Brent has a
question.
question.
Yeah. Do you take an asset management fee on your partnerships?
I don't. I'm gonna be, but I don't.
Tony's a good partner, you guys.
Yeah. And we were talking about that a little bit earlier, Brent, and what we were saying that I think that the market is about 1%. Do you know? I mean, is that what you're seeing on your end?
Yeah, 1%. Yeah. There's a lot of fees, the role you take, if it was a larger syndication or what have you, I mean, there'd be fees coming in every direction, acquisition fees, asset management fees, refinance fees. It sounds like you really set it up well and your interests are aligned with your partners. I think that's great.
Thanks.
Well, and Tony's really detail oriented, so he's just a good partner to have. And we've had meetings of AVID investors where we've talked about how we're all supposed to be asset managers and really be paying close attention to what's going on. And nice, because Tony really actually does that. we don't always do that. I don't know. I don't always do it. I always mean to. But.
So
okay.
Where have I left off? What else you got for me?
Well, so I think we kind of covered this, but when you and I were preparing or talking in advance, we talked about the operating agreement a little bit, but let's kind of rehash. Even if you're partnering with your sister or your mom, or somebody you trust 100%, well, anyone you partner with you should trust, but the role of the operating agreement is helpful even in really small and casual partnerships. And some of the things that it covers is what happens if the partner dies, what happens if there's divorce, how is it going to be handled if one partner wants to sell and one partner doesn't, and you haven't talked about that. You usually do a vote, or what do you do when someone wants to sell?
Yeah, I think I kind of touched on it a little bit earlier though, but we do a vote, and the operating agreement is going to tell you what percent, right? It's going to most likely be majority. I don't vote, and so we just do the math based on the remaining partners, and whatever they decide, we do. So if it's just a 2-partner deal, if my partner says they sell, guess what? I sell. So it's all in there, and then there's again the attorneys get involved and we get some resolutions and do a little CYA and proceed.
Well, let's talk about why partner. Why should we partner? This is something we're going to kind of wrap it all up in a bow with, and let's just do a recap. Let me do the official in summary. So, all right, folks, we've been Tony Drost of the Boise Investment Properties Team, and he's been telling us all of his ins and outs and stories on partnerships. So as we start a recap of this engaging discussion we've had, let's kind of rehash some of the pros and cons to partnering with others on your real estate investment.
Is that my cue?
That's your cue.
Okay. So, I mean, I think one of the big pros is I talked about my high school friends that have too much money and they can invest in a property and forget about it. And they know that, I'm going to put them in a good property and I'm going to take care of it. And all they have to do is cash the checks when they come in. I know that that's what they like. And in all the cases with those guys, it's really made asset management really easy. Like, we can't make a mistake. Even we blow our budget on expenses, but ultimately, if you end up selling with the way the values have gone, you still come out looking like a real hero. So being able to invest and forget is one of them, right? That's a pro. The other thing is you can invest. What I used to say was you could invest. The larger properties, the more units were performing better, but who had the kind of money to do that? So you pull in a partnership, and together you take that money and you're able to invest in an asset that is performing better, something that you normally couldn't have afforded to get into. But as a group, you can, and you get the better performance. But now you just are able to, the plus is you're able to put less money in and participate in something. And you can do, if you got a lot of money, you can just do multiple, so you're diversified. You don't have it all in one deal, right? So that diversification, low money in. What else? I think the cash reserves. I really, so I audited a lot of people's financials, and the one thing that you don't see is a lot of cash reserves. And we structure these partnerships to have cash reserves, and I think that it's forced upon you, where maybe normally you'd say, gosh, I got all this cash sitting here, I'd really like to go buy a new ski boat, and instead of keeping the cash reserves, where we've got the cash reserves, we're not going to have that cash call, and when we get the call that the roof needs replaced and it's $100,000, we're not sweating too much, right? So I think that's a big plus that probably doesn't get a lot of credit, but especially as the asset manager, it gives me a lot of confidence. I'm not concerned when I start seeing low cash reserve. I get a tad bit nervous. I don't want to have to make decisions because I can't afford it. I want to look at my problem and I want to solve it the right way. And I know that if I do it the right way, the long term, it's going to pay off, right? Anybody else, Britt, may be able to throw in? Is there any other pros to the partnerships?
Actually, I like what you said, Tony, where you said, you have investors that have expertise and that are, bring other things to the table, like the contractor or what have you. That's really a good point. So I would.
Thanks. The cons, let's see. Probably the biggest con is lack of control. Are investing in the property and assigning an asset manager, and that you're giving that asset manager full control. They're going to be making decisions. They may not make decisions that you agree with. They'll make decisions that you didn't even know about, that you'll find out later. So there is a certain number of people out there that would probably drive them bananas. So they probably shouldn't do that, right? Have the right asset manager. So again, we go back to that trust and kind of aligned thought processes. Another con, which it's all percentages, so I had some of the people that were small percentage owners, and every time we did a distribution, it was a couple, usually $1,000, and they're like, gee, this doesn't seem all that worth it. Well, it was 25% of your, the first distribution was 25% of your initial contribution 4 months after we bought it. I mean, that's not bad, buddy. You know, it only seems like a couple grand, but good God. And then when we sell it, we double the money and you get 20 grand, and they're like, yeah, you know, that was a lot of work for 20 grand. Oh Lord. So there could be that perception that, you know, they're just receiving petty money instead of actually looking at how well their cash performed, which was excellent. So I talked about lack of control.
Did you say the part about where when you're raising more money, your actual percentage return that taps into your overall return?
Yeah, thanks for reminding me, Stacy. So when I'm, you know, again, if I'm raising $1 million and I want 250 in reserves because I got a lot of capital expenditures that I'm planning on doing, everybody just needs to understand as I'm going to raise 1.25, and then you're going to have other costs, right? And all that added expenses dilute your percentage of ownership. So if I wouldn't have collected 250,000 in cash reserves, your percentage of ownership with the same amount of contribution would have been higher, if that makes more sense in it that way. So when I collect those extra reserves, it just dilutes a little bit, but I think it's all going to work out the end on the sale because we will address all of the deferred maintenance and we're going to get a better price. So I think it works out fine. Most people don't even realize it. Their percentage of ownership. Most of my partners don't even realize, you know, that I did raise the extra 250,000 and it's sitting there. They really don't pay much attention these days.
So if you're out there and you're thinking about partnering, go ahead, grab a couple friends, do real estate together. Some of the pros, you'll get to participate in an investment that maybe you wouldn't otherwise have afforded, or your risk will go down because, of course, your risk is directly proportional with the amount of cash that you bring into the deal. And if there's multiple people bringing in cash, then you're bringing in less. You've got an asset manager to the decisions and to manage the property manager and really pay attention to what's going on. And that could also be considered a con. You're not making all of the decisions. So if you want to be super hands-on, maybe a partnership isn't for you. If that lack of control is going to drive you nuts. Your tax returns will be more expensive. If you're raising adequate reserves, which you better well should, because nobody likes a cash call, then if you're running percentages, that could tap into your percentage ROI. And you know, but it's overall, as long as you've got trust and good rapport and your operating agreement sets up how decisions are going to be made, but operating agreement, put it together, and also make sure you've got fewer than 10 people in there, that you're not advertising, you know, avoid those securities laws because those are real. And make sure you've got all your folks set up in advance, and that's going to include your lender, your insurance, because insurance can be different. They're going to want all the partners named, your title, of course, your agent, property manager, asset manager who may charge a fee. Maybe it's around 1%, and whoever, I just forgot, accountant and attorney. So the trust should be there, and sometimes you can use a partnership in the ways that Tony's done it in the past, which was speed. You can have a few clients who are on the fence, or maybe have decision, you know, analysis paralysis, or just a little bit hesitation on the market. And Tony, as an agent, can go ahead and work up a contract, put his own money into it, and do all that without. He knows what a good deal looks like, so he can just put the good deal together and then see if any their own if want. But sometimes it can be a tool for speed. Other times that's more of a delay, and your money's out of your pocket longer before performing. So another one of those that can be a pro and a con. But I think, and then the big pro tip, I think the pro tip of the day was also inviting your property manager and tradesmen to be partners, and then they're engaged in the property's success, right?
I think Brent wrote that one down.
I wrote a bunch of things down. I learned a lot on this one. Thank you.
Oh, yeah, I bet.
I seriously did. It's fantastic. Thank you.
So did I. Really quite valuable. Thank you, Tony and Stacy. Very valuable. Thank you.
Thanks for joining in, Dave. Appreciate that. Well, guys, AVID Investors, thanks for tuning in. We have a great meeting next week, and if anyone wants to throw some more questions at us, you're welcome to, but we'll officially call this a wrap on the Pro Tips for Partnerships by Tony Drost.
Thank you.
Thanks, Stacy. Good job.
Thanks,
Thanks,
guys.
Tony. Nice job, dude.
Really good, guys. Appreciate it. Thanks, Stacy.
Thank
Take
you.
care.
Thanks, everyone.
Hi, Irene.
Hi, Stacy. Thank you, guys. You did a fabulous job.
Oh, glad you loved it. Are you guys doing well?
We are. Thank you. What's how about you? Everything's good with you and your hubby?
And we just did a partnership with Tony on accident. One of Mike's deals sold, and so we're 1031ing into a partnership and buying a new townhome. So
Oh, that's exciting.
Yeah.
Oh my
so yeah, we're
gosh,
still acquiring
congratulations.
and
Yeah.
thanks.
Still
Mhm.
moving. Well, keep me in the loop. I always appreciate all your insight and your you always just have great direction. So thank you. Yeah, I know. I
Yeah,
was
thanks
just
for
looking on
tuning in.
LoopNet as you were meeting. I was like, ooh, let me check a LoopNet. Let me check this. Always looking, right?
Yeah. Yeah, well, if you want,
sounds
hit me up
good.
for a pro forma on the single families, because I know you've done some of those, but we've seen some good stuff in just brand new single family homes.
Okay, sounds good, Stace. Okay, well, you have a good rest of your evening. Thanks again.
You too. Thanks.
Bye-bye.
Bye, Darren. Bye, Jim and Judy. Thanks for tuning in.